Today, Bitcoin sinks as global economic pressures mount. Yuga Labs, the creator of the Bored Ape Yacht Club NFT collection, announces job cuts, and Anthony Georgiades of Innovating Capital breaks down how economic uncertainties are pushing crypto markets lower. Smith. Crypto prices are in the red this morning after a weekend of trading in which we saw Bitcoin's price swing between $62,000 and $64,000. By noon Eastern, that cryptocurrency was smack dab in the middle, trading at $63,000. Ether, meanwhile, fell to $31.81 and Solana dropped to $136. Investors are still making sense of the current economic situation around the globe. Here in the US, GDP data last week showed the economy grew less than expected in Q1, all while inflation data shows prices are still going up faster than the Fed's 2% goal. Now, all of that is likely to be on the Federal Reserve's radar as it meets this week, but Wall Street widely expects interest rates to remain unchanged. That being said, Treasury yields are moving lower today as well, something that would normally raise Bitcoin's price, and we'll talk about that more for our main story. All right, first, let's talk about today's headlines. Yuga Labs, the company behind the Bored Ape Yacht Club NFTs, is cutting staff as part of a restructuring. The company's CEO, Greg Solano, announced the layoffs Friday on X, sharing screenshots of the message he sent to Yuga Labs teams. In the note, he shared that Yuga lost its way and is going from 0 to 1 again. Solano, who is a co-founder of the company and has been CEO since February, didn't specify how many jobs were affected. Bored Ape Yacht Club transaction volumes have fallen more than 98% from their peak in August of 2021, according to data from CryptoSlam. Next, the Department of Justice is pushing back against Tornado Cash developer Roman Storm's motion to dismiss charges. Back in March, Storm's attorneys argued that referring to Tornado Cash as a mixing service is misleading and that it's neither a currency mixer or a service. They also went into detail on how Tornado Cash works to prove that point. The government, meanwhile, argues in this latest filing that the motions should be dismissed entirely and reiterated the claim that Tornado Cash laundered at least $1 billion in criminal proceeds and even facilitated the laundering of funds used for North Korea's weapons of mass destruction program. The DOJ says it expects to prove Tornado Cash executed anonymous transactions for its customers and that Storm cannot obtain dismissal of the indictment by simply making factual assertions about his own contested view as to how the Tornado Cash service operated. All right, let's go back to markets for our main story. After crypto's price swings over the weekend, I spoke with Anthony Georgiades, general partner at Innovating Capital, to get his take on how macroeconomic pressures are weighing on the crypto market. I want to start with Treasury yields. The yield on the 10-year Treasury has come down from its Thursday high after we got that U.S. economic data showing GDP growth fell below expectations. It's unusual to see both Bitcoin and Treasury yields moving lower together rather than opposite directions of one another. What do you think? What do you make of that move of seeing Bitcoin sort of fall with Treasury yields in the past few days?
Yeah, there's a lot going on in general right now, obviously from both kind of a monetary, but really what's becoming a big highlight is the fiscal policy, which I'll touch on in a sec here. You know, as you mentioned, Treasury yields are down. We had a GDP print last week that really showed a bit more of a sluggish economy, while higher core PCE comes and demonstrates that, hey, inflation's certainly sticking around a bit longer. So this stagflation risk has obviously led to some fears that, you know, there might not necessarily be a rate cut for the foreseeable future this year whatsoever. I think the markets are still pricing in, one rate hike. With respect to Bitcoin and risk assets, obviously, you have two highly conflated efforts here, monetary policy and the fiscal policy side. And I think the markets are really trying to wrap their heads around how that might impact a risk on asset in this particular environment. And I think that there's been obviously less enthusiasm or optimism just with respect to the potential speculation of Bitcoin in this upcoming bull market with respect to ease of monetary policy. But then the other thing I think to think about too is there are certain supply demand dynamics that are happening right now. Halvening just happened. We aren't necessarily seeing the same sort of speculation in that asset class as we saw in previous halvening cycles. And I think a lot of that also has to do with some of the institutional pressure and the dynamics of certain supply flows in the market that are impeding some of those same historical precedents.
Yeah, there's a reason I started with talking about the macro environment versus, something like the halving or the ETFs, which are both in the rearview mirror now. It feels like the macro environment is really what's in focus right now. The Fed is meeting this week, and I think that's on the mind of a lot of investors. We don't expect a rate cut coming, and in fact, expectations for a rate cut have been pushed back, as you mentioned. One of the things that we saw with the crypto market as interest rates climbed in the past year and a half is that there was a lot of panic at first, but then people sort of looked past what the Fed was doing. Do you see a situation where if rate cuts get pushed out past 2024 into next year, that eventually some of the concerns from crypto investors might get diminished and they might start paying less attention to the Fed? Or is this something that's going to stay with us until we actually see rate cuts?
Well, we obviously live in a economy that's driven by quantitative policy, easing versus tightening. And so whether or not some of those concerns should really obviously be mitigated, our staunch position and my strong conviction is that the future of Bitcoin is not necessarily going to be totally driven by pure monetary or fiscal policies, especially one that pertains to a single nation state, being the US. We obviously don't live in that environment today, and Bitcoin is going to be extremely reactive to short-term movements with respect to 10, 25 basis point rate moves. Over the long term, Bitcoin will likely behave more in an inflationary resistant and more safe haven perspective. We're obviously not there yet.
The other thing I want to talk to you about outside of the macroeconomic environment is the regulatory environment. The SEC seems to be picking up the pace on its enforcement actions again, especially when it comes to the DeFi space. We had the Uniswap news not too long ago, and then we had the consensus lawsuit in the face of its own Wells notice. Do you think that the focus on DeFi is problematic for altcoins or Bitcoin going forward, or is this just noise that investors will eventually look past?
It's certainly noise. The regulatory environment is, I'd say, in a very vulnerable state and at a crossroads with regards to what the future of Web3 and digital assets will be in the United States based off of measures that regulatory bodies and legislators enact now. I'm of the opinion that the way that we're seeing things unfold right now is not necessarily the healthiest for the long-term growth prospects of Web3 in the US. And I certainly think that obviously investors, traders, etc., need to be very mindful of certain enforcement actions that are taking place now. That being said, we're seeing for the first time more bipartisan support for clear-cut regulatory guidelines. And obviously that's not going to happen overnight. But I do think that some of the issues we're seeing today with respect to certain enforcement actions will potentially subside over time as there's a more clear roadmap of how you can operate and how you cannot operate.
The other thing we're watching are the Ethereum ETFs. We're expecting to answer on a few proposals in front of the SEC right now, coming up in May. It sounds like people are mixed on whether those will get approved. We saw a huge run up for Bitcoin after the spot Bitcoin ETFs were approved. If these ETFs don't get approved, do you think that will hit Ethereum's price? Will that have any effect on Bitcoin? What are your expectations there? Do you think that they'll get approved?
I'm very bearish on the concept of an Ethereum ETF. The SEC has made it very clear. At one point in time, it had labeled Ethereum as a sufficiently decentralized asset. That was obviously pre-merge. Unfortunately, Ethereum became somewhat of a captured network post-merge. And when that occurred, you obviously are dealing with a self-staked asset. Obviously, users must self-stake 32 ETH in order to actually operate validators on the network themselves. And in theory, that's great. But certain features of Ethereum that enable effectively pooling of assets and liquid staking in the form of Lido or Coinbase or things like that led to a somewhat captured network. And so Ethereum today, validators are really controlled by, I think the last time I looked, it was the top 4 or 5 validator providers controlled over 50% of the network. It makes it much easier to freeze transactions. It makes it much easier to obviously communicate or corroborate with certain regulatory bodies if things need to be reversed or if certain transactions need to be blocked. And it also lends itself to the fact that Ethereum is not sufficiently decentralized. So I think there are a few issues right now with the Ethereum network and how it's actually positioned that the SEC is not going to necessarily allow it to effectively have the same underlying label as Bitcoin did in being sufficiently decentralized. And until it determines whether or not it's actually security, I don't see an ETF in the future.